Okay, so where to enter on a trade, and obviously you want to enter low. Um, if you're doing a long, so you're like buying low and selling high, you want to enter low if you can. So obviously how do you find the low, right? And so I have a lot of indicators that are supposed to help try to find the low. Um, and I put arrows, like you can see that little arrow there, the magenta arrow, and so like if you look at these pink circles, I put the pink circles there. They represent lows or valleys or highs, and so this one here, there is no arrow. That one has an arrow. That one does not have an arrow. That one does have an arrow. So my arrows, you can't rely on my arrows for every low, um, every valley. And that's just the way it is. It's pretty hard to write a program that will detect every valley. So, but you have to do a combination of things. One thing they always tell you is that the valley here, and that you have to have higher valleys and higher valleys, and there's a higher valley, and that's a little bit higher valley, and the values keep going up. And so anywhere along here is like where do you enter? And so I want to show you a mistake. On what I did was I entered up here towards the top, you know, and I knew it was an uptrend, so I was going to get in here, and then I was going to try to ride it high. Well, the problem is you get in here, and all of a sudden it starts crashing. And you're worried about taking a big loss. I mean, this could be. Um, I mean, look at you have two big arrows here, so this could be a reversal. This could be a reversal. And so I got kind of caught up um, in. You see this green diagonal line. I'm like, this is the green diagonal line, and the price broke through it. Right there, the price broke through. So it's like, oh, quick time to get out. And the problem is, I was just narrow sighted. I was just looking at the small little from here to here, and I should have gone from here to there, and then you got this bigger green line. So you got the short green line, which if you're going to do a scalp, from here to there is a scalp, right? Um, or you could get the long trend line, which is kind of my goal. So I got in here, which was terrible. So I got out right away, and I mean, it was a small loss. It's not that big a deal. Um, and then I got in, and this is actually a good point. I'll explain. A good place to get in. I'll explain. Then I got out here, and I took a profit, and the profit was from 58 to 46, so 12 cents. So about a 0.5% profit. So that's just like a little profit. Um, and that's nothing to brag about. It's okay. And then over here I get broke even, and over here I took a loss. But it was a bad day trading. And so what I learned, I want to learn the the part about getting in and the entrance and stuff. And so um, basically this one right here, this loss, this I don't think was too bad of a play. I mean, it was a very minimal loss. It's like a break even almost. The one that was bad, I think, though, was this one. I got out too soon, and this one I should have never got in. So let me explain my new strategy for getting in. You're going to get in somewhere on an uptrend, and so what you want to do is look at the valleys. So you got to really look at the valleys, and try to look at major valleys. All right, so major valleys is like long, tall, red and green candles. This is like major tall ones, right? I mean, you can compare it. They're long and solid. There's trading going all the way up and down here. So like these guys are not long and tall, and these ones here are both have some volume. It's the black volumes, and on an uptrend, the valleys. If you get volumes on the bottom, that's a major one. So on an uptrend, some values like this one here, see there's no really volume there because there's no like the black triangles or blue triangles. So at any rate, here's the thing: is when you find the valley, there's a upper part, the top, the high, and then there's the low, right? And in general, where you want to get in is the peak of this valley here will be the bottom of the next valley, or the next valley after that, right? So let's just look at that. So here's a valley, right? And so right in here is the peak of this valley, and it comes over there. And so the peak of this valley is like the bottom, a little bit below the bottom of that one. And now we look at this valley. The top of this valley is the bottom of that valley, and the bottom of that valley. And let's look at this one. The top of this valley is, we come across here, it hits that point. There's up and down, hits it. So the top of this valley is the bottom of that one, and comes over here. It's close to the bottom, right? It's close to the bottom, just a little bit more. So the bottom actually is a little bit lower. All right. So what we've seen here is the general rule that the top of this valley is going to be the bottom of this next major valley, and it has, as you can see, just in these 1, 2, 3, 4 examples, it's not totally consistent. It's close. Like here's just a little bit lower. The top of this valley just almost the bottom of this one, but this was a little bit lower. And this one here is just a little bit lower than that one, but right on with that one. So those are good rules of thumb. So you're up here, and you got the start of the day, peak, valley, peak, valley. So you're kind of expecting the next peak to be higher if it's going to be an uptrend. I mean, this one here could be a downtrend. At that point, you really don't know. Anyway, so it hits here, comes down, bounces off it, comes down, bounces off it, comes down a little bit, and then breaks through. And so now you know that you're on an uptrend. And there you go. There's an uptrend. You got it. Okay. So now you know you're on an uptrend. And so now you see this line here. It broke through. And that's what I was waiting for. This is like that peak, that peak, that peak, and I could see it breaking through. So I got in right there to try to get in on the upward trend. And I thought it was just going to go skyrocketing, and so I'm going to get in on it really quick, and that was a mistake. And what I missed was, and it did break through, but you know that it's going to fall again. So how far is it going to fall? And this, where it falls, that's the time to get in, right? I mean, this right here is a pretty long uptrend, and it's got to fall. So what I should have been looking for once it broke through is to look for this fall, and look for the bottom. Now here's where it comes across, so I'd expect it to bottom out here. And so you see the red, right? And it could have kept on going, you know, it could have just kept on going, boom, 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 but eventually it has to turn around, right? Well, it did. So here's your green bar, and this is the turnaround. So you got volume at the bottom, a black and a blue, and you got your, this is, I'm going to actually call this the type of support line. So at this point, when you see the green, it's like, you know, you're on your way up. So you could just go ahead and get in. And remember your, you could even say, okay, here, see this horizontal line across here, and it's broken through it 1, 2, 3 times, and here's the bottom, right there, that bottom right there. So you could, once you saw this green right here, you could put an order in to put a buy stop at this level, you know, or a little bit above the level even. And now you're in an uptrend, and you're safe. And remember now, the bottom of this, the top of this valley. So I'm going to use this the blue diamond right here, the blue triangle volume, that's going to be my support line coming across like that, right? And so what you're going to say is, you're going to get up, you're going to get in over here, but you're going to put your cell stop. You're going to get in above this little thing here, just in case it goes crazy, because you want to get, and you're going to put a cell stop here. So from here, where you enter to your loss is going to be 28.39 to 46. You'll take a 7 cents loss, which is 0.25%. So it's nothing. So to start out with, you're going to put it 0.25%. And anyways, so now we're going to look for peaks and valleys, right? And we're going to try to ride it up. And so it goes up, and it hits this diagonal resistance line, comes back down, and now you got to start of a new resistance line. But this is like the short-term resistance line. That's where I get fooled all the time. This is a short-term resistance line. Comes down, and I end up getting out up here. And I should have stayed in. Then it went back up again and hit this long-term diagonal line, and come back down. And by golly, now it reaches the lower diagonal support line, right? And now it's coming back up, and now we have it doesn't make it quite up there, but it comes back down. Now what's interesting is that it almost like this might be the top, like it's going to reversal, because notice this peak here is below this upper diagonal. So, and here's my black line, and maybe if I draw it like this, it might look a little bit better. So if you look at this valley right here, and we draw a line, so here's the bottom of the valley, this red, and then it goes to green. It comes across there, right? And so and this one here goes there, and the top of that valley is there. So that's what I'm saying. This valley is sort of a fake valley. It's like a short-term scalping uptrend, where this second green line is like the long-term trend, and these middle green lines is where I get faked out. So what we have to realize is this is a fake valley. And if you look at it at this fake valley, right, see how short these candles are compared to these candles over here. These are two nice and big ones, right? We go over here, and these aren't that long, but at least these ones have volume. So you got the blue triangle, which is high volume, and red, and then you have another black one in red, and then you have another black one that's green. So you got three of them in a row here. Where over here you just have one black one over there. So this is a legitimate value, even though it's not long candles. This one is kind of long, and that one is kind of long compared to these other candles that are precede it. So these aren't as long as those candles, but they are long compared to these other ones. So this is a legitimate valley. And anyways, so this, you got to connect that valley to that valley to that valley, and then it readjusts a little bit here. So you might want to make a new bottom trend line. Anyways, if you look at this one here and go across, it goes across to this point, to this valley here, and then it's almost at the bottom of that valley. So the rule still holds in true. And but overall, this stop loss our original stop loss was right here, and I'm going to get rid of this one. It just confuses things. So by the time the second one comes along, if we want to, we can move. We can add another. Having a little stop loss down here, we can bring the stop loss up higher. This is a true valley. It's determined. So now we can bring a stop loss up here, right? So if it does somehow keep on going down low, we've at least won't have as big of a loss. In fact, our entry point was about at this level. So now if it comes down and reverses and cuts through here, our new stop loss is at the point where we wouldn't have lost any money at all. But we would still want to ride it up if it's going to go up, right? And sure enough, the next valley is here, right? And this is debatably a valley, and this is probably a short-term valley, right? And this is a long-term valley. So if we take our trend line, diagonal trend line, we get something like that. And so at each one of these valleys, we can start, like on this one, we moved up our stop loss here. On this one here, we can move it up to here. So we keep on moving it up. Once it's a confirmed valley, and we're looking for it to come back down, and it comes down here. Now this time it's confirmed, so now we can add another one. And I've been putting it at the bottom of the valley instead of at the top of this thing, because like I said, you might be right here at the top of the valley is here, but when you come across to the next valley, it's not always at the very bottom. So that's I kind of use the bottom here. Maybe I could move it up a little bit. The bottom of this valley, that's where I put my new support line. And then at the bottom of, now once this next valley happens, it's confirmed, I can move it up there. Next valley, I can have another stop loss there, but I have to wait for it to confirm, so it has to be up here, right? And now you'll note that this is the trend line goes from here to here, and here it has 3 points. This the diagonal resistance 1, 2, 3, and then this one here goes up a little bit. So I'm claiming that's the short-term trend, a short-term cycle. It's not the real one, and so I don't move the stop loss up to here, but I stay true to this one. So that's like a non-confirmed temporary or valley, and it comes down here and it hits the trend line again. So now I can move, once it's confirmed, and look at that, it's just close, right? So if I would have stuck at the bottom of this, it wouldn't have put a stop loss here, it wouldn't have stop lossed out, it would have kept on going up. Been close though, a little bit too close for comfort. So here's this line, and it just barely breaks through, so we're going to say that's okay. So or we can adjust it a little bit, right? And there it goes. So we can put some more ovals there. This is a valley there, but it's not a strong valley because there's no volume. There is a little bit of volume right here though, and you're just kind of hitting it and hitting it, and all of a sudden we get some blues, high volumes there. So that's like a legitimate valley. And in the meantime, this thing keeps on moving up. So we can move it moves up past it, so we can put our new stop loss up here, right? Whoop. Right there. Now this is a valley, but I call it a false valley, right? Because it's gone up past that. Yeah, so the long-term trend here, so we have is sort of a one of those oops. From here to here is forming a temporary, I'm going to call it a scalping resistance line. It's not a true resistance line. This is the true one. And notice then this little peak comes down and hits that. So that, and also note that we have some volume on this one. So this is a true volume. And anyways, we're getting towards the end of the day. This is here is at 12:50. The day ends at 1. So this would be a good place to exit anywhere in here. Now, notice this peak up here. That would be the best time to exit. That peak and that peak. And if you look at the black squares here, that black square there is they're called a flat top. Same with that one there. So I don't know, 12:30. Right around there is probably what I would exit it because I'm getting towards the end of the day, and that's at 29.4. So if we followed our uptrends where they came from and went to, our entry was right here. Right back here was our entry, and we made it all the way up to there. 29.4 to 28.4. So we basically made a dollar on a $29 stock. So it's basically that's a 3% gain. That took us all day to get there, and that's the end of this video. But I hope you see the important principle is the bottom of one valley. The top of one valley forms a resistance line at the bottom of the next valley. So top of valley 1 equals bottom of valley 2. That's the principle.